What if you could collect hundreds in passive income each month without lifting a finger? Sounds too good to be true? It's not. In this video, you'll get to know top alternative investments that generate true hands-off cash flow. Intrigued yet? Let's dive in. Real estate. First up is real estate. Owning rental properties can provide passive income from tenant rent payments. It does require some work like finding tenants and making repairs, but if you hire a property manager, it can be a fairly passive way to earn. There are a few different real estate investing options to consider. Rental houses or apartments. You'll need a larger chunk of cash for the down payment, but rental income can deliver strong cash-on-cash returns. Look for properties in desirable areas where you can charge higher rent. REITs, real estate investment trusts, allow you to invest in rental real estate without being a landlord. REITs own and operate commercial properties and distribute at least 90% of taxable income as dividends. Real estate crowdfunding. You can invest in rental properties for as little as $500. The crowdfunding company vets the deals, manages the properties, and sends you dividend checks. I like real estate for passive income because your tenants are basically paying your investment for you. Just be sure to run the numbers carefully to pick profitable properties. Peer-to-peer lending. Up next is peer-to-peer lending or P2P lending. This is where you lend money to borrowers through an online platform. The borrowers get lower interest rate loans while you earn attractive returns. Some top P2P lending platforms include Lending Club, Prosper, and Funding Circle. Returns generally range from 5 to 12% annually. P2P lending does carry risk if borrowers default on loans. However, you can reduce risk through diversification by lending small amounts to many borrowers. Also stick to higher grade loans. Overall, peer-to-peer lending offers some of the highest returns you can get on fixed income investments today. Just be sure to reinvest your repayments so the interest compounds. Don't forget to subscribe to Penguin Profits. Dividend stocks. If you want passive income from the stock market, dividend stocks are one of your best options. These are stocks that pay out a portion of the company's earnings each quarter to shareholders as dividends. Dividend stocks tend to be more established, lower volatility companies. Some examples include AT&T, Coca-Cola, and Johnson & Johnson. Aim for stocks with long histories of steady or increasing dividend payments. The average S&P 500 dividend yield is around 2% today, but you can find individual stocks yielding 4 to 6% and more. Reinvesting the dividends allows you to grow your holdings and income stream over time. Overall, dividend stocks are one of the simplest set-it-and-forget-it passive income assets. Private equity. Up next is private equity. This refers to investing in private companies rather than public stocks. Private equity firms pool money to invest in and improve private businesses. As an individual investor, the easiest way to access private equity is through a fund. Average returns historically exceed 10% annually. Keep in mind, private equity investments are illiquid. Your money is tied up for years before the fund exits each investment, but the returns can absolutely be worth it. Just be sure only to allocate money you won't need access to anytime soon. The payoff is deferred, but potentially lucrative passive income. Bond funds. Bond funds invest in portfolios of bonds that generate interest income. One of the best types of bond funds for passive income are municipal bond funds. Municipal bonds are issued by local governments to fund public projects. The interest income is exempt from federal income taxes, and if the bonds are issued in your home state, the income is double tax-free. For example, a municipal bond fund yielding 3% tax-free is equivalent to a 4.5% corporate bond yield for someone in the 32% tax bracket. Tax-exempt income really boosts returns. In addition to municipal bond funds, target highly rated corporate bond funds for consistent income. Bond funds provide instant diversification at a low cost. Enjoying the video? Hit the subscribe button. ETFs. Speaking of low-cost instant diversification, ETFs are another solid passive income asset class. ETFs or exchange-traded funds track indexes like the S&P 500. All you have to do is invest in one ETF to gain exposure to hundreds of stocks or bonds. The expenses are dirt cheap too. Most ETFs have expense ratios under 0.10%. For passive income, target a dividend ETF like VIG, a REIT ETF like VNQ, or a high-yield corporate bond ETF like HIG. ETFs offer cheap, diversified exposure to almost any income-generating asset class you can think of. The passive income doesn't get much easier than buying ETFs. Gold. Up next is a commodity that has preserved wealth for centuries. Gold. Physical gold itself does not produce income, but you can invest in gold mining stocks that pay dividends. Streaming and royalty companies like Wheaton Precious Metals offer exposure to gold production without the risks of traditional miners. In addition, gold bullion pays no dividends, but it does act as a hedge against inflation and dollar weakness. Many investors keep 5 to 10% of their portfolio in gold for diversification. Overall, gold's role is more about wealth preservation than income generation, but it's a smart long-term holding that can provide stability during periods of market turbulence. Digital assets. Speaking of providing diversification, up next is an entirely new asset class: digital assets. Cryptocurrencies like Bitcoin and Ethereum don't pay dividends, but the blockchain technology behind digital assets has created new income streams. For example, you can lend your crypto and collect interest through decentralized finance or DeFi lending platforms. Rates can be as high as 4 to 8% annually. In addition, you earn crypto rewards through a proof-of-stake model just for holding certain coins in a wallet. And there are new platforms distributing stock dividends in the form of digital tokens. Digital assets have plenty of risks, but they open up fresh opportunities to earn passive income on your crypto holdings. This technology is still brand new, and it's just getting started. Passive real estate investing. Another potentially lucrative passive income asset is turnkey real estate investing through a company like Roofstock. Roofstock handpicks rental properties in markets with strong fundamentals. You invest in a property online with as little as 20% down. Roofstock vets the properties, handles all repairs and management, and sends you a monthly dividend check. Average cash-on-cash returns exceed 7% today. Turnkey investing allows you to be a passive landlord with none of the hands-on headaches. Just collect those monthly dividends. Farmland, and the final passive income asset I'll mention is farmland. Farmland has generated annual returns in excess of 10% over the last 20 years. You can invest in farmland through platforms like Farm Together. The company purchases and manages farms growing organic foods and nuts. Investors earn cash rents and profit from crop sales. Farmland offers diversification from traditional investments. Demand for agriculture continues increasing with global population growth. If you want passive income tied to an asset with tangible value, Farmland Investing checks all the boxes. There you have it. 10 of the best alternative assets for earning passive income. Each offers a hands-off way to generate consistent cash flow. Feel free to pick and choose your favorites based on your specific goals. And if you'd like to learn more ways to make passive income, be sure to watch this video on your screen right now, and I'll see you on the other side.